Hello and welcome to another session of the My Solo 401k Financial, My Community Daily Webinar Series. Thank you so much for joining. If you have questions or topics that you wish to discuss, please chat those over now so that we can be sure to get to them all. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. Again, welcome to your daily Solo 401k webinar and Q&A session with my Solo 401k Financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic is the December 31st deadline, specifically for Fidelity Solo 401k and solopreneurs looking to open accounts at Fidelity. Solopreneurs must beat this December 31st deadline to secure 2025 contributions. Again, this is your chance to get answers. Please use the chat now to ask questions on today's topic or anything else. Please chat them over now so that we can be sure to get to them all. Before we turn to the slides, let's knock out the questions that have already been uploaded or posted. The first question is from Yuri. Thank you so much for bringing the question. How to pay the taxes on the Solo 401k RMD, the 1099-R requested already. So you would, when you take a required minimum distribution, that means that you are withdrawing money from your Solo 401k. So that means you need to add that amount to your income for the year of the distribution. So you will receive a 1099-R if you submit the information now here in 2025 using our online form. You'll receive that 1099-R by the first part of 2026. And then you'll share that 1099-R reporting that income with your tax advisor. So the amount can be added to your income tax for 2025. So ultimately, you'll be paying the taxes at that point. So I presume that's what you're referring to. Let me know if that doesn't answer your question. Next question is from Harry, my solo401k.net client. I was a sole proprietor from January to August 2025 and switched to an S Corp in September. I haven't made any 2025 solo 401k contributions yet, and the plan also hasn't been amended to add the S Corp. So that's something you would want to go to our support page and follow the prompts so that you can prompt us to prepare the amendment. We have a one-time fee to prepare that amendment to reflect the fact that your business is now taxed as an S Corp. So that would be a document change, an amendment. You wouldn't change the name of the plan. You wouldn't change your investments. You wouldn't change your accounts. So it'd be a document change. Now, can I still contribute based on my sole proprietor income from earlier this year? Yes, you can. You can make contributions from all sources of self-employment income for 2025 by the 2025 business tax return deadline, including any timely filed extension next year in 2026. So you can make contributions based on the income that you report as a sole proprietor for 2025, plus any W-2 wages that you receive, any W-2 income that you receive from the S corporation for 2025. Hopefully that makes sense. We'll pull up your account here and send you an email regarding those RMD questions. Let me grab your email here. One second. All right. Okay, one second here. I'm just tagging your email for purposes of following up regarding the RMD and the procedures. One second. Thanks so much for your patience. I was tagging your account. We'll send you an email after we're done here. But I mean, also to let you know, withholding requirement does not apply to required minimum distributions. You can withhold, but you don't have to. All right, so we got that one answer. Good question. Now we're back to Harry. One more question. When my solo 401k.net amends my solo 401k to add the S Corp, does that replace my original sole proprietor adoption? It replaces it, but again, you can make contributions from all sources of self-employment income. So you can aggregate from all sources. So even if you have sole proprietor income from another business in the future, you can aggregate from all sources of self-employment income to justify contributions to the solo 401k. So you won't be limited even after the amendment. Next question is from John Rogers. Thank you for bringing the question. I'd like to use a solo 401k or a Rob's 401k to invest in real estate. The strategy will differ on deal to deal. Sometimes it will buy and hold, other times it will fix and flip, or seller financing or long-term rentals. It will only be residential real estate. I would love if I could do this full-time while receiving a salary from the retirement account. Rob's strategy. Is this possible with the above deal strategies? Otherwise, my understanding is that any funds generated as a result of the investing or work will go directly back to my retirement account, solo 401k. So it's not possible to do both. You choose one or the other, and it comes down to whether or not you're going to actually be working in the business. So a Rob's 401k is for business financing, and the person that's using the retirement money needs to work in the business. Now, it can be a real estate business, provided that it's a business that's managing or developing properties. So not just passively investing, for example, in other real estate ventures. So in that case, it's a specific structure. For example, you have to own and operate the business via a corporation taxed as a C corporation. So the C corporation would sponsor the Rob's 401k. The individual would be able to roll over money that's eligible to be rolled over, such as money that's in a former employer plan or a non-Roth IRA, and then invest from the Rob's 401k into the stock of the C corporation. So a significant portion of the C corporation stock will be held via the 401k. Then the corporation will operate the business. In this case, a real estate operating company that where the C corporation owns the real estate and then is either managing or developing the real estate. The individual needs to be working as a bona fide employee of the corporation. And then the individual would be able to receive a reasonable salary, W-2 wages from the corporation based on the work that the person is doing. So it's got to be reasonable. In other words, not more than what the corporation would pay someone else to perform the same work. Now, the corporation will need to wait until it's actually generating income to justify the salary before the individual that used the ROBS to fund the business could start to receive salary. But the individual needs to work in the business. And once the corporation is generating income, the individual may receive a reasonable salary from the corporation. So for what you're describing, it wouldn't be the solo 401k, it would be the ROBS 401k. The 401k wouldn't own the property. The C corporation would own the property. The 401k wouldn't pay your salary. The C corporation would pay your salary. Hopefully that helps. I'm a single member LLC, taxes and S corp. This is a good question here from Avi. I will be doing a cash balance plan for 2025 and want to do a 2025 setup for a solo 401k. When is the deadline to set up a 401k, and when can I contribute to the 401k plan in terms of profit sharing, employee referrals, and employee after-tax contributions and Mega Backdoor Roth contributions? So the deadline to set up a plan for 2025 is December 31st. So if the plan is established by December 31st, you don't need to open up accounts, you don't need to make contributions, you just need to sign up, because we prepare the documents, we put the documents in place, we put the plan in place within the same business day. So as long as you sign up by the end of the year, you'll preserve the ability to make all types of contributions for 2025, all the way up until your tax return deadline, including extension in 2026. Do I need to report the RMD tax on my 1040 only? Well, you would want to share that with your tax advisor. That could depend on your facts and circumstances. You may need to report it on a state income tax return as well, for example. But at a minimum, it would go on your 1040. A follow-up question from Avi. I understand solo 401k plans don't allow for employee after-tax contributions, but only pre-tax and employer profit sharing. So that is not correct. For example, our solo 401k plan documents most certainly allow for after-tax contributions. That's how you make Mega Backdoor Roth contributions. And the ability to make Mega Backdoor Roth contributions is one of the top use cases for our customers. I see your email. Thank you so much. We'll follow up with you. We are with my solo 401k financial, but we've helped thousands of customers open up accounts at Fidelity. That's one of the top, that is the top brokerage where customers are opening up accounts. So we definitely wanted to share this information because it's information that's highly sought after. Good question. A follow-up for my sole proprietor to S Corp question. Is it better to make 401k contributions before the S Corp amendment, or it doesn't matter? So if you're going to be making, ultimately it doesn't matter because you can make contributions based on all types of self-employment income. But if your business is really going to be operated primarily through the S Corp, it's better just to make sure you do it in a timely fashion, et cetera, that it's taken care of sooner rather than later. All right, now let's turn to the slides. And if more questions come up, please chat them over so we can be sure to get to them all. So let's lay the foundation in terms of solo 401k eligibility. A solo 401k is an owner-only plan. So it is a 401k plan that's designed specifically for self-employed individuals with no non-owner, non-spouse, full-time W-2 employees. So you first need to demonstrate you're self-employed by reporting earned self-employment income on your taxes. For example, on Schedule C, if your business is taxed as a sole prop, or maybe a single member LLC taxed as a sole prop. Income reported on a W-2, for example, if your business is taxed as an S Corp or a C Corp, could be a corporation taxed as a C Corp or an S Corp, could be an LLC taxed as a C Corp or an S Corp. Or if your business happens to be taxed as a partnership, earned self-employment income is income reported on line 14 of the K-1 that you received from the partnership. The other part of the solo 401k eligibility equation is that you cannot have any non-owner, non-spouse, full-time W-2 employees. So that means your spouse can work in the business, and that won't prevent that individual from setting up a solo 401k. It would still be considered an owner-only plan. You could also have contractors, 1099 independent contractors, and that their presence won't prevent the business from setting up a solo 401k. You could even have W-2 employees, but they can't be full-time W-2 employees. So a full-time W-2 employee is an employee that works 1,000 hours a year with 1 year of service, or 500 hours per year for 2 years. It's also noteworthy that you can have a solo 401k even if you have a W-2 job. So if you have a side hustle with no employees, the fact that you have a W-2 job, the fact that you even participate in your W-2 employer-sponsored plan is not going to prevent you from setting up a solo 401k. So that's what allows you to set up a solo 401k. Now let's talk about the critical December 31st deadline. So in order to preserve the ability to make all types of contributions for 2025 by your self-employed business tax return deadline, including extension in 2026, you must establish the plan by December 31st, 2025. So you need to sign up because we create the plan. We put the plan in place within the same business day when you sign up. So what's not required? You don't need to open the account. So we are neutral as far as where the accounts are opened up at. One of the top destinations is Fidelity. We have helped customers open up accounts at hundreds of different banks, credit unions, as well as many different brokerages. The top brokerage is Fidelity. So if you want to open up the account at Fidelity, we will most certainly help you do that as part of the onboarding process. But you don't need to open up the account at Fidelity by the end of the year. You don't need to obtain an EIN number for the solo 401k by the end of the year. That's also part of the onboarding process, is to obtain a new EIN number specifically for the solo 401k. This is different and distinct than the EIN number that you might have for your self-employed business. That's the IRS expectation, but that is part of the account opening process, because those accounts will need to be opened under the EIN number for the plan. But that means it doesn't need to be obtained by the end of the year. You also don't need to fund the account, so you don't need to make those contributions by the end of the year. So you can just focus on the paperwork first. Many solopreneurs stress about getting the brokerage account open before December 31st, but this is not necessary. All that's needed is to ensure that the plan is in place by the end of the year. Everything else can wait until 2026. Specifically, the plan documents are in place. So you can think of it as a two-step process. Step one, sign up with my solo 401k financial by December 31st. We will generate your IRS approved plan documents within the same business day. Then you can take your time to open and fund your accounts by the 2025 business tax return deadline, including extension in 2026. And when you're ready to do that, we'll guide you through the process step by step. So it's a simple 3-step process to sign up. You submit the online application, which is just 10 simple questions, make payment. Once we receive the application and payment is made, we prepare the documents within the same business day. An email goes out where you can download, so it'll be a link to a secure download portal where you can download the documents. You can then sign, but you can take your time to return the documents, to let us know where you want to open up the accounts. You can take your time in 2026. So as long as you sign up by the end of the year, that's going to preserve the ability to make those contributions. You can take your time, for example, to determine how much you want to contribute. So for example, you'll have access to all the different contribution buckets, whether or not you want to make employee, employer, or voluntary after tax. You can take your time then to open up accounts and fund those contributions by your business tax return deadline, including extension in 2026. So just to dig a little deeper as far as those 3 key steps, the first step is the online application. You can sign up quickly and easily at mysolo401k.net. Just click on open account, then click on get started under solo 401k. That'll take you to our online application where it's just 10 simple questions. We're gathering information about you, about your business, the name that you want to have for the plan. So we want you to use 2 words in the word trust for the name, for a total of 3 words. Once we capture that information and payment is made, we will then use our IRS approved plan documents to draft the solo 401k plan specifically for your business. So a 401k plan is a legal entity. So like any legal entity, it's the documents that create it. So we will create those documents for your business. So you're talking about the adoption agreement, the trust agreement, a copy of the IRS favorable determination letter that confirms that the plan is a qualified plan. Because when you go to make those contributions, you need to make those contributions to a qualified 401k plan so that they can count as a deductible contribution, or they can count as a Mega Backdoor Roth contribution. So you'll receive an email with a link to the download portal to download the documents that were drafted specifically for your business. The cover email will specify how to complete and sign those documents. You can use electronic signature software to sign them if you'd like, but you don't need to return the documents back to us by the end of the year. You don't need to let us know where you want to open up the accounts. You can take your time. But when you're ready, in that same email, in addition to that download link, there's going to be a second upload link where you can upload the completed and signed pages. And then a third next steps questionnaire link where you let us know where you want to open up the account. So for example, on the drop-down menu, Fidelity is an option. So you can choose Fidelity when you're ready to open up the accounts. Now, once you're ready to open up the accounts, you return those completed and signed pages. Again, you can use electronic signature software to complete and sign the documents if you have that on your computer, for example. You could choose Fidelity from the next steps questionnaire. Again, that's linked from that initial email. You could let us know, for example, that you want to do Mega Backdoor Roth contributions. So that once we receive those completed and signed pages and the response to the next steps questionnaire, we will then, number one, obtain the EIN number for the Solo 401k from the IRS that's specifically for the plan. That EIN number will be used to open up the accounts, and then we'll prepare the paperwork that's needed to open up accounts at the bank or brokerage of choice, whether it's Fidelity, Schwab, or a bank or credit union, for example. Now, once the accounts are opened up, you can fund those accounts. You can fund those accounts either by making contributions, and we field questions every day from our customers in terms of educating them on the contribution rules, right? Based on their situation, how much can they contribute? How much can they contribute as an employee, as an employer, pre-tax versus Roth, etc. The other way you can fund the account is by rolling over money from an eligible retirement account. So eligible retirement accounts are going to include a former employer plan or a non-Roth IRA. So we've helped customers transfer funds from hundreds of different institutions because, as you might imagine, the process is going to vary from institution to institution. Whether it's a former employer plan at Fidelity or an IRA at Vanguard, the process is different. But fortunately, we've tracked our experience in our knowledge base so we can leverage that experience to make the process easy for you. So some quick FAQs, and then we'll go back to the questions that are being chatted up. What do I have to do by December 31st? You just need to sign up, because signing up is what puts the plan in place. You just need to establish the plan. The way that you establish a 401k plan is through the documents. You don't need to open up accounts. You don't need to get the EIN number. You just need to sign up. Do I have to open the bank or brokerage account by December 31st, 2025? No, you don't. All you need to do is sign up, because that's what will establish the plan. And then you can take your time to open up accounts and make contributions anytime up until your business tax return deadline, including extension in 2026. Do I have to obtain an employer identification number by December 31st, 2025? No, you do not. Now, the IRS expectation is that an employer identification number will be obtained for the Solo 401k. This is different than the EIN number that you might have already for your self-employed business, but that EIN number doesn't need to be obtained by the end of the year. That EIN number is obtained as part of the account opening process, because it'll be used to open up the accounts at the bank or brokerage of choice. And we obtain it as part of the process. Is the tax return deadline my personal tax return deadline, April 15th, or my self-employed business tax return deadline in 2026? So if you establish the plan by the end of the year, December 31st, 2025, now you've locked in the ability to make all types of contributions for 2025 by your business tax return deadline, including any timely filed extension in 2026. So let's say your business is taxed as an S corporation. In that case, the contribution deadline would be March 15th, or actually March 16th, since the 15th falls on a Sunday, March 16th, 2026. In other words, your 1120S, your S corporation tax return deadline, or September 15th, 2026, if you file a timely extension for your 1120S. But let's say your self-employed business is taxed as a sole proprietorship. In that case, really your self-employed business tax return deadline is your 1040 deadline, because you report that earned self-employment income on Schedule C of your 1040. So in that case, the contribution deadline would be April 15th, 2026, or October 15th, 2026, if you file a timely extension for your 1040. If I adopt a plan in December 2025, how can I make contributions based on income that I earned in January 2025? Well, we follow the industry best practice, which is to establish the plan to make it effective as of January 1st, 2025. So that means that you're going to be able to make contributions for 2025 for any income earned and reported for 2025, any self-employment income earned and reported for 2025. My CPA tax advisor is informing me that the employee contribution must be made by December 31st, 2025. Are you sure that I can make this contribution in 2026? Well, this is a common point of confusion, as employee contributions for a full-time employer plan, say one that you have through a day job, would need to be made by the end of the year. But the rules are different for self-employed individuals. And this is clear per IRS publication 560. which clearly states that as long as the plan is established by the end of the year, you can make all types of contributions, whether employee, employer, and or voluntary after tax, by the business tax return deadline, including any timely filed extension in 2026. And this makes sense from a policy perspective because a lot of self-employed individuals may have a seasonal business. They may be working all the way up until December 31st. They may not know exactly how much they've made until after the end of the year. So the rules give you time to determine how much you can contribute, decide how much you want to contribute. The key, just to be able to give yourself time, is just to sign up by the end of the year, because that'll put the plan in place by December 31st and meet that setup deadline. Okay, great. That takes us to the end of the slides that we wanted to share. Now we want to go back to the questions that are being chatted up. Before we do that, we want to just ask you to please like and subscribe. If you are finding this to be helpful, please take 1 second to like and subscribe. Liking will tell the platform, whether you're on LinkedIn, YouTube, Instagram, X, that this content is valuable and it's going to help other solopreneurs like you find it, other advisors. So if you could please like and subscribe, that would be greatly appreciated. And then the benefit of subscribing is you'll get notifications, because we do go live every day. So you'll get notifications of when we go live, so you can come and ask questions or hear the content that we come to share. So you'll get notifications of all of our crucial content that we deliver every day to help you secure your retirement just by simply subscribing. So now let's go back to the questions. Thank you for the additional questions. I understand that there are limitations on employer profit sharing amount if doing a cash balance plan along with the 401k. What are these limits? So that's a great question. So making contributions to a defined benefit plan doesn't reduce how much you can contribute to a solo 401k, but making employer contributions to a solo 401k can reduce how much you can contribute to a defined benefit plan. So to preserve the ability to maximize contributions to the defined benefit plan, the individual would want to make sure that their employer contributions to the solo 401k doesn't exceed 6% of their compensation. So the cap would be 6% on the employer contributions to the solo 401k. Note, it's noteworthy that maxing out employee contributions to the solo 401k, maxing out voluntary after-tax contributions to the solo 401k does not reduce how much you can contribute to the defined benefit plan. We will file it electronically for those that submit the online form in a timely fashion. So in other words, here in 2025, for transactions that occurred in 2025. So we don't mail it, it's electronic. Electronic, yes, good questions. When I sell stocks from my non-prototype Fidelity, shall I pay taxes on that sale if the gain stays? No, when you have gains inside your solo 401k, those gains are tax deferred, potentially tax free if inside a Roth account. I noticed there were several different solo 401k options on my solo 401k. Which one do I pick given my situation as single member LLC, taxes, and S Corp? So there's just one application for the solo 401k. If you click on open account and then click on get started under solo 401k, that'll take you to the solo 401k application. Now, we do need to know how your business is taxed. So one of the options where we ask you as we go through the questions about your business and how it's taxed in the drop-down menu, one of the options is going to be an LLC, taxes, and S Corp. Good questions. Thank you so much for bringing them. So let us know if you got any additional questions. We got a few more moments. We invite you to our community. We have the largest community of self-directed investors, solopreneurs, solo 401k owners. We have over 30,000 members, which means we've got a vibrant collection of forums, vibrant forums. We have a library of videos and webinars. So there's tons of ways to learn, tons of ways to share the knowledge. It's totally free to join. It's not just limited to clients. It's not just limited to advisors. Really, All are welcome. It's free to join. So you can join quickly and easily at my solo401k.net/my community. So please don't hesitate to join. Well, it looks like that's it for today's Solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this Solo 401k community. We'll be back here tomorrow with more crucial content to help you secure your retirement.